All right, you're good to go.
All right. Hello, everyone. Good morning, afternoon, evening, whatever it is for you. Everything we talk about in this live is not financial advice. Please do your own due diligence before putting risks on the table. Forex is a high risk activity that can incur losses. You guys know the drill. Welcome to our live. Today, we're going to be doing back testing. You guys will get a little bit of the secret sauce, some actual trading in the back tested markets. And just some quick explanations before we go over that so that you guys kind of have an understanding of supply and demand and flip zones before we get into entries. I don't think I'm going to cover my entry model, at least not yet, but we'll see. But we're just going to be doing some back testing with some supply and demand trading. But all right, that's the beginning. I want to first say, before we even talk about any of this stuff, so I got a question first. Okay, I'm going to cover that, the high, low. Okay, so topics I'll cover real quick. I'm going to go fast because we have whole videos that expand on these ideas. So I'm just going to cover them so that you guys have the explanations. Strong highs and weak highs and reverse for lows. Supply and demand zones and kind of how to find them on a single time frame for now. You guys can use them across multiple time frames and you'll probably see that in the back testing, but I'm just going to show you how they work. And then flip zones and how they form, or at least how I see them form. If Miss Navy has corrections for the way she does it, she can correct me on her style. But those are the main things I'm going to cover, and then we're going to get into the back testing. But like I said, I want to tell you guys that when we are showing you the way we trade, if you get an idea for something, please, please, please back test it. Do not put live risk in the market because you've seen another trader do it, because we have an understanding of things in the moment with an experience and a market that we're used to. Don't try to just copy an entry model and expect it to work, because if you go through a series of losses, it's going to affect you emotionally. It's going to affect the way you trade. You need to backtest your own entry model. I just want to cover that first. So what I'm going to start with first, I guess, since it was asked about, is weak and strong highs. So GU is kind of like what a lot of people trade around. So I will use that as an example, I guess. Look at a price time frame that most people aren't really looking at. Let's look at the daily. Let me hide all my. What's it? Isn't there a way to hide all the drawings? Just the drawings? Yeah, there we go. Okay. So weak highs and strong highs first. I mean, yeah, weak highs and lows, strong highs and lows. So simply put, when a low exists and a high is formed from a candle breaking and closing above like a previous swing point, that becomes a low, that becomes a high. Once that happens for the first time, that means that the high has been broken and the low has not. The low, the money that started the low is strong enough to break the high, right? So that becomes a weak high, and these highs become weak because the order flow has become bullish. So because the order flow is bullish, we expect these highs to be weak and the lows to be strong. So when a low is formed and then it breaks the high, we expect that low to be strong. The price shouldn't revisit under that low until the high gets taken out. And that will continue up until the order flow switches bearish. And then the lows should be taken out and the highs should be strong and the lows should be weak. So to really put it simply, during an uptrend, the swing lows are strong and the swing highs are weak. Okay. And during a downtrend, the opposite is true. During a downtrend, the swing highs are strong and the swing lows are weak. It's simple. Hopefully that explains weak and strong highs and lows really quickly for you guys. Now, supply and demand. Supply and demand is pretty similar to weak and strong highs in ways, because basically when a low creates a new high, right? So we got a low, and that high didn't get formed yet. That high hasn't been taken out, and then this high gets taken out. So these zones that move that are demand zones. They're areas where demand steps in the market. Now, these kind of have been mitigated. We'll get into that later. I think it'll probably be in the back testing. You guys will see stuff like mitigation, but that is a demand zone. A demand zone is like the lowest point, basically. You can use wicks, you can use the candle that gets reversed to start the move. You can use you know, a range, like for example, you can use like, you know, the whole range or something. I mean, this would be a huge zone, but you guys kind of get the idea. How you define it doesn't matter, but really supply and demand are areas where the price gets pushed to break structure. So if this high gets formed, right, and it never comes above this high, and then structure gets broken over here, that is an area of supply. There's a lot of supply in the market, enough that the market never came back up before breaking structure. That's a supply zone, right? This zone is an area where the price pulled back to and didn't get any higher and pushed it down. That's a supply zone. And because that zone hasn't been revisited really. Well, I mean, it gets touched, but it hasn't really been revisited. This is also, you can even move your supply zones as you go. Like that's one, that whole range has been mitigated. Maybe the extreme can hold, things like that. But really, supply and demand are just the areas that price comes to where big money steps in the market and breaks structure. So when structure gets broken, that becomes a supply zone. When structure gets broken, that becomes a demand zone. And I mean, over and over and over and over and over in the market, these kind of zones will get visited and price will react to them. Why does price react to supply and demand zones? Well, we can't move the market no matter how much money we put into it. It takes a lot of money. These institutions put their money in the market and they protect that money. Basically, they're pushing the price and they don't let it revisit. They don't want to lose their money. They don't let it revisit. So, and also they can't put all their orders in at once or the market will just move, right? So they put some of their orders in and the price has to come back and fill the rest of those orders. And when it does, it's going to push more. Now, when those orders run out, obviously, you know, it won't hold anymore, but that's why supply and demand works and what it is. Hopefully that's a nice quick explanation on supply and demand. It's basically just the point that breaks structure. And when that happens, when that point breaks structure, there's probably a lot of money sitting there. So us as retail traders, we go, okay, well, those guys put that money in at a point, they expect price to move to a serious area. So we'll get in at their orders and then, you know, this is kind of like a quick, it'd be something like this. You enter around the area where it taps that zone, right? And you'd want to have a stop loss. Sorry, I gotta take magnet off. Sorry. Just kind of like a quick example on like how this kind of thing works. It's like you as a retail trader are guessing that this money is going to be protected. And so if you lose, so too does, you know, the institutional traders that made this happen. So you want to find a zone that means something to them. And that's kind of like how you can use these in your trading, but we'll get into that later too. But I'm just saying, it's just the points basically that break structure. That's supply and demand. I think I've beat the hell out of that one. And now flip zones. This was the most kind of requested. So I'll talk about flip zones. Flip zones are supply and demand zones
Right,
that
Jeremy.
change. Yeah.
Try not to move so much because the more you move, the more laggy it gets. So like just
Okay.
stay at one part of the screen and just don't move.
Pen on TradingView. I've never tried it. Where's the drawing tools? Oh, here's the drawing stuff. Where is the pen?
Good question.
Oh, like the
Brush? Yeah, the brush.
Okay.
Yeah,
I
Do you not know how to use?
Yeah, because I'm not used to that. There's no way. No, I'm not. We'll see. We'll see. I'll practice that. But anyway, flip zones are basically areas that, okay, so we can all agree that this is demand, right? Demand is coming in and bringing the price up. Okay, so first you find your zones, your supply and demand zones, right? So we got demand. I'm not gonna, sorry, we have whole videos explaining what demand is, so I'm not really gonna go over what demand is right now, but
And I
you
will
guys
be back
okay.
testing, so you guys will see
Yeah.
that too.
So demand gets hit, okay? And comes up, does not break that high. So this is demand before, right? We agree that this is demand. This is where you buy from. Well, it did not break that high, and then it breaks below demand. You guys see that? It broke below the demand. So now this area, this supply that broke the demand and the broken point are a flip zone. And that's an area, and you can refine it. I mean, you can refine it using supply and demand. And as you can see, I mean, there's a reaction right there, but that's an area where the market has changed and taken control. It's flipped. Demand became supply. It's a flip zone. It's flipped from demand to supply. Does that, hopefully that one example, I'll show one more example, but hopefully that, I mean, they're really simple. That's what a flip zone is. So we'll go from supply to demand this, oops, we'll go from supply to demand this time. Sorry, I know I'm moving the chart just to give a different example. So we have supply, right? We can even, I mean, supply, okay. Price breaks above the supply. So now it's been traded through. So we take that zone, right? That was right here, the zone that broke above it, and that is a flip zone. And because that's an area that flipped to demand, it's an area you can trade off of, right? Boom, there's a reaction, there's a reaction. And this is the daily, so these are some big reactions, but it's because it's off of the time frame that you're looking at. I'm looking at the daily, so the reactions are daily reactions. So if you're looking at a 4-hour flip zone, you can base your distance of reaction off of 4 hours, so on and so forth. But okay, I'm glad that those are the main things I wanted to explain because it's important for both the entry model and everything we've been explaining. That's pretty much it. I wanted to make all that clear. So yeah, I think we can pass it off to Miss Navy now.
All right, so let me share screen. Everyone can see my charts. I'll actually move this around too. Okay. So today we are going to back test UK 100. A little bit different again as well, but it's indices, so be fun. And it's not like a indice that a lot of people trade, so be fun to try. It works during London time as well, so that's generally what I trade. So these are the lights or the green things anyway. So let's go to 1 minute and let's just go back here. Watch, yeah. Let's go back.
I'm gonna say quickly, she's going to show you on 1 minute time frame, but it will work what she does on pretty much any time frame. It's just focusing on how she's like identifying her supply and demand and then looking for the entry based off of those areas. But the concept of supply and demand works on any time frame. So you guys don't have to be on 1 minute time frame, and you don't have to just be on the UK 100 to do this. She's just picking this pair and showing you guys on a time frame she's comfortable with.
Also, I don't want you guys to think that you need the 1 minute to get that high risk reward either, because you can get crazy high risk reward with multi-time frame analysis on like the 15-minute or the hourly or the 4-hour.
Yeah,
So
like maybe next
it
time
works
we'll
the
do
same.
another stream about that on a higher time frame rather than 1 minute.
Yeah.
Yeah. But yeah, it's just a lot of people wanted me to show and explain a bit more my thought process behind how I trade and how I identify certain areas. So I will do a bit both. So I will show the happy trail entry, and then I will show the other way I do enter as well, just to give you guys perspective and how I see the market. And then, you know, from there we can kind of just change up a little bit and do higher timeframes if need be. So I'll start here right now. So yeah, what's up? What happened?
Nothing, I don't, trade opportunity coming up.
Yeah, that's so good. We'll change it up because like what I do works on all time frame. It is very kind of changeable. So it's just the concept. So I'll just do what I do in 1 minute, and then maybe next stream we'll just do like a higher time frame or something like that. And that way you guys can see that it is quite versatile. But I'll start. Okay, so right now back tested. So we are doing the entry model at 1 minute. So we are going to enter on the 1 minute time frame, but we do our analyze the charts from top down. So we'll start with top. So top for me is normally daily. If you want to look at the weekly just briefly, you can see that essentially it is bullish in a way overall, but right now on the daily, what you can see here is we're coming to a very strong point here, which is right here. This is daily supply. If you look at like very, very closely as well, it's kind of like there was a little bit of like liquidity sweep here on a lower time frame. And then, yeah, price just kind of dropped. And by dropping, it took out this level and this level as well. So, and then obviously it just wicked this level down here too. So there was like, this is a very clear, strong movement. Daily, the bears came into the market as imbalances, pushed the price down, took these levels out. If you were looking to draw structure in a little bit here as well, then you can see that this, I'm just going to make sure it disappears, is how I would view structure on the daily. So this is going to be daily structure. So this is the extreme of the daily. So if you wanted to, you could do this, the extreme like that. Or I'm just going to do this because this is a flip zone. Right here, flip zone. This was the last demand, price broke through. This is the last bullish candle before the breakdown that closed. So the last, that closed right here. So that closed, last candle, that's the flip zone. That's my daily supply for now. Just gonna get rid of this now. Okay. Now, same thing a bit more. We're not going to refine the area a bit more because this is a big range, especially we're trading a lower time frame. This is huge. So we're just going to pinpoint, refine these areas a bit more. So right now, let's have a look. So what do we have? This level got taken out. This level got taken out. And then this level got taken out. Okay, so these were like demand zones on the daily, like especially this one here, because this one took out liquidity here, which you can clearly see. So this is swept. So this is clearly a strong demand zone that took out this liquidity, and then it broke. So the last candle before the close, which is very teeny weeny, is this bullish candle. Last candle before the close down. I'm just gonna move this across. So that's the 4-hour supply. But again, this is like a whole range. So again, if we're looking at structure, it would be this. This is the low. This is the high. Then it chalked down. And then went all the way down here. So this would be like the structure. And then chalked. So now, again. And then like, yeah, just like these tiny ones. Kind of like you can put it in one swing, or you can just kind of do it. They're really, really small, so they're very fine. But you can see that essentially what the point is that after the big break, it's now retracing upwards. So now we're kind of bullish towards this higher demand zone here. Oh, sorry, higher supply zone. So I'll just get rid of these again. Okay, cool. So right now, what do we know in the 4 hours? So essentially, we have a zone within the daily that we're looking at. This is a strong zone to me because it took out like about 2 levels, especially a level that's really strong. So this is a key area I'm looking at. But then again, this is a like extreme. So I generally mark 2 things on my chart. So either do the flip zone, which is this one, and the extreme. So extreme is generally like the top of the move. So this is extreme. Then there's like these levels here as well, but these are generally the two zones I draw on the 4 hour and on any time frame. Flip zones and extremes are the two zones I draw. Besides that, I don't do anything else. If you look a bit more down here as well, what can we see? Well, this zone here, nothing has closed above it yet. So because this is also a flip zone as well. If we're looking here, a bit more. So because obviously that move took out all this, all that, like it's a really strong move down. So this is another zone here. It hasn't, it's wicked, but hasn't. So I'll put this here. I'm just gonna note this down too. There. But if we're looking at the charts, we would expect like maybe this to go and then come to this zone. So we'll see what price gives us. So jump on 15. So what I'm going to do is I'm just going to move it to the next trading day, which is about, okay, there. Just going to close that out. Okay, so I'm just going to do that. So we'll just have a look at this section of the chart. So what we can see here is we are bullish. So high, low, and then this is our like weak high, and then this is our protected low. Okay, so essentially again, this is protected because we're in a bullish trend, so we expect price not to break below. We're expecting the highs to be taken out, which it has already wicked and it's very close above it too. So that's already confirmed it. So we are like essentially looking for that kind of trend. So this broke, candle close. So the last bearish candle before the break up would be this. So this is the 15-minute demand zone in question. That's only because it did take this out. So it did take out the high, that's the last move. And then of course we have the extreme here as well. That's that. And then there's other zones here. So it could come down if it wanted to this level down here. This is an internal structure, so it could come down, but the two major ones is this zone and this zone. So we'll just have a look. I don't think we have anything on the 15-minute to the left very quickly. No, it's just pretty much that whole range again. Okay, that's fine. Let's just continue on a bit more. Okay. All right. Oh, wait. So it's tapped. Let's jump back down. So we're just going to have a look now. So it's tapped into, well, almost tapped into the 4-hour zone we're looking at. So we're just going to take it slow. So now we're tapped. Okay. So now let's go in. Let's keep watching. So I'm just going to draw this for a second. Just going to wait. Give me 1 second. Okay, so this is our current zone, the green box. So essentially, because you can see here, these areas, which is like liquidity, this has been taken out. So liquidity been taken out. And then if you look here, this is the close. So this means this is the last bearish candle. I'm drawing it like this. Normally I like to do this, but that's too small for me. So I need to do this. So that's going to be what I'm doing now. So I'm just going to wait for price to validate this green box, and then we'll look for an entry. So we're just going to keep going. All right, perfect. So it's validated the green box with a wick. That's fine. That's validates the box. So then we're looking at for entry. So we have two methods of entering. So we can enter, I'll just put Happy Trail on. The more refined way, or the way that I trade, is you'll use like the entry about like, you'll take a zone up here, like a zone, like using the last candle, whatever you want to do, you can use the last candle. I'm just going to do it like this because to me, this is actually considered as inducement. These like levels are really the same. So same high, wick. This wick here took out this high down here. So if you look carefully, this level here, it took out this level here. And then these ones are the same. So for me, this is what I consider as inducement, just simply because they're just equal. So it's just, you know, there's sellers here that I'm waiting for. So we're just going to keep watching. So I'm just going to move this around. So we'll put inducement. So I'm actually going to put my order. Let's do it. All right, because I'm going to put an order here and see what price does. It's very fine, but I'll just give a little bit gap for some leverage, and then we'll wait until we get tapped in and see what it does. So let's have a look. So we've got our happy trail print here, Now we just need a one that comes back. So we need like a happy one, not a sad one now. So if it gives us a happy one at all. Okay, it's going. Okay, we got a happy and we got a tap. Okay, so we've got two. Let's just see. All right, so we're tapped in. So I'm just going to move this to the side. And I'm just going to target like this low, that low before the push up. It's going to target that. So that's that. Okay, happy trail as well. So let's do a happy trail entry here. We'll just put it right there. And then we're just gonna target. So let's go 2. Yeah, let's go 2. Sure, why not? So let's have a look. Let's move this along. Go. Okay, good. So this trade is done. This trade is still going. It's fine. We'll keep watching. Again, like none of this thing bothers me. Like I don't care about what's happening here. That's just as like what we talked like last stream. These are all just liquidity. Liquidity being built up to lure people more into the market, and then price comes up, taps into a higher, which is the extreme of this particular move. So this is the extreme, comes down. Now these are just new structure, but this is extreme. These are just used to feel the move before it goes down. That's all it's doing. We don't care about what's happening. It doesn't matter to us. We're just looking at the extreme. So this one's all done. Yeah, cool. So I'm just going to move this side here. Okay. And now let's see what it does. Again, as you can see here, liquidity just being formed, liquidity being swept, enticing more players into the market. Now what I just want to do here. Okay, so happy trail loss. That's all good. So that's fine. I'm just going to move that there. So we'll have a look and see what else is going to do. So right now, again, this is counter trend because essentially we are bullish, but because we're tapped into a higher time frame that has shown some kind of strength, especially on the 4-hour where liquidity was taken, and then there was a massive drop from that particular zone. I do expect a strong reaction from here. Again, it is counter trend to the overall trend because the overall trend is bullish, but I'm kind of like, after a break, we expect a pullback, retracing back to one of these zones. So that's why I'm looking for these trades. I'm just going to go and see what else price does. So this thing wicked here, what has it done is taken all the liquidity out from here. So liquidity up here has all been swept. So all the sellers up here have all been taken out of the market. So now we'll have a look and see what price does from here. So does it validate something? Let's have a look. Let's do my green box. Let's have a look. Okay, so validate my green box. So I'm just gonna actually do another entry here as well. I'm just gonna use the last bullish candle before the move down. So I'm just gonna do that one there. So last bullish candle here, up here before the move down. I'm just gonna take that. I might actually just also just bring this candle to as well and just see what price does. So let's have a look. Let's go down. Oh yeah, and obviously I'll for my order here. And just a little bit just to cover like spreads. Yeah, and then we'll just whatever go down here as well. Okay, let's go. So tapped in, we've got a happy smiley face print as well. So we're just gonna wait for the opposite smiley print. Gave us one there.
Hold on, Navy, I'm just gonna interrupt you real quick. They're asking multiple times, one more
Oh.
time, you could explain how to show what your green box is, or what what your green box encompasses.
Oh, right. Sorry. My green box is just essentially changes in character. So it's literally, if you look, so I'll just mark out my zones again. Let's do this one. So this is structure. I'm just going to do an orange. So it closed above here, close, and then that's like the low here, and then this is the high. So if you're looking at structure, that's essentially what's happening. It's just, this is just structure moving up, and then it closed below. So I'm not looking for a major break here because I'm a very aggressive trader. I'm not looking for it to close here. I'm looking for it to close below here. The last candle, the last three, whatever, like the last candle, the flip zone of the move before it goes up. So it validates the moment it wicks it or candle close below it. That's it. So this green box has been validated because it wicked below. So that's why it's validated. It's perfectly fine. Or even if you want to, that's already closed here, but like essentially it's already been validated. That's why I'm perfect. That's validated. And then this one, where have I lost my green box? Oh, here. Yeah. Same concept. This is the last, obviously the last demand zone that caused the break up and took out liquidity here, all this. So all liquidity here was taken out. This was the last move. I'm only using the last three candles. So this is generally how I mark my box. I generally just take the last up candle moves before the down move. So that's why this box here, it closed below it. So it's validated. Any other questions? So essentially like break of structure and chalk is liquidity sweep. Like it's just liquidity. Generally a chalk, if you have to you understand, chalk can be two things. It can be a sign that a trend is reversing, or it's a liquidity sweep, which is why if you want to confirm a change in direction, like a change in trend, you want to wait until like, so for example, I'll just draw that. So that's like a chalk here. So that's a chalk. So chalk. Then you want to wait for a lower high to form, and then another break of structure, and then that will confirm your uptrend. Otherwise, a chalk can just be a liquidity sweep. So it's like an extra conservative step. Is you can wait for another break of structure in the same direction, and that confirms your trend. Otherwise, yeah, chalk it can be a liquidity sweep. It can just sweep left and right.
You guys can think of them fractally. A chalk can signify the pullback of the structure on the internal, like the little internal swings. The internal structure breaks can signify a pullback of the swing structure, and a swing structure break confirms that the trend is changing. Does that make sense? Okay, cool. Okay, not yet. I'll explain that more later, I guess.
Okay, and the box clicks to draw on the charts for which you will be taking entries. Yeah, so I only draw my green box only for entries. I don't really draw my I don't literally go 1 minute and start picking out supply and demand zones on the 1 minute. I don't care. I've already picked it on a higher time frame. So for me, that's all I need to do. The entry is simply I need my green box to be validated. Once it's validated, I'll either wait for a happy trail print entry, or I will pick a zone within it, normally the extreme, because again, extremes is where I normally pick my supplies and demand zones. So I'll use those zones, and then that's it. So that's all I do. I don't bother about these details here because again, they're just fractal. 1 minute is really noisy, so you just have to just ignore these because this is all just liquidity being built up. Liquidity. See here, there's a bunch of liquidity down here, a bunch of liquidity over here. Like it's just all being built up. So it's just distracting you from what it wants to do.
So,
yeah.
no, sorry, go ahead. No, someone asked if about trailing stop loss. I'm not gonna answer for Miss Navy, obviously. She could tell you that. But I will tell you, if you're using liquidity like this to make an entry, the risk of trailing your stop loss is that the order flow is generally going to go in the direction on the way down to your target, but it will pull back to pick up more. Like, let's say you're taking these down trades that Miss Navy has marked up. The market can often come back to supply zones to pick up more big orders to take that liquidity and push past the previous demand zones. And because it can always revisit the same supply zone twice, trailing your stop loss can knock you out of these liquidity moves by getting you out of that trend when you really were safe behind that zone that started it. So again, not saying you should or shouldn't, not saying Miss Navy does or doesn't, but I'm just letting you guys know the risk that you take when you trail your stop. You are massively, by taking this type of tight entry, you are cutting out your potential risk to reward for safety. So it's up to you. It's like, can you stomach the risk by not trailing your stop? You're going to get that full move. If you can't stomach the loss after being in the market for that long and seeing such a high win, then you can trail your stop, but you're going to knock yourself out of most of the really big winners. If that makes sense.
Correct. And like yes, I absolutely do trail my stop. It just makes no sense not to. Because like, why would you leave your stop loss there and then the price is down here and then it stops you out? Like, you might as well take something out of the market rather than wait for it all the way back to you.
I said once it breaks swing structure, I will move my stop to break even, and that's it. I don't trail my stop at all.
Oh, okay. Well, that's just me. That is just me. This is just a thing that we disagree on. Like, that's all good, man.
Miss Navy.
Do you take partials?
I agree with Miss Navy here, and just it is a personal decision. But what I would say, even if you don't trail, I would at least make your trade risk-free. So at least you break even, so you are no longer going to potentially lose, because nothing will irritate you more and mess with you mentally than watching your trade go, 3, 4, 5 plus reward, come back, and then like you lose potentially. You have a good idea what the market's doing when you're doing analysis, but you don't always know. That will be crazy. The other thing is, if you are somebody who's on a funded account or you're using a pretty high capital, at some point, and I will admit I am the queen of doing this, I love my little 1.5 or 2 rewards because it's guaranteed money. And with the capital I trade with, that's a guaranteed usually $1,500 to $2,000 for me. And I would rather secure that personally and know I made it and I can shut my computer off and go away for the day now, than sit there and wonder what if, or potentially lose that. It's guaranteed money. And if someone told you, hey, here's $2,000, or do you want to hold? Most people would say, no, I'll just take the $2,000. So this is where you have to decide for yourselves. But what Jeremy is saying is that more times out of none, trailing too quickly will likely result in you getting stopped out. If you're somebody who's using the lower time frame like this, and this is trailing is a little more advanced too, but as you get a little more comfortable with it, as you use the 1 minute time frame, if you were to move up another time frame, say you move up after the move has played out maybe on this time frame, it doesn't mean that you're wrong in the move potentially. There might be room to trail then, and you could use the higher time frames and wait for the retracement. It's kind of confusing, but basically you'd wait for the retracement on the smaller time frame and then let it play out on the higher time frame. Then once it's come back, retested, or created what Miss Navy likes to call the flip zones, it comes back, maybe makes a new one for you, and then you can say, okay, now I'm safe to trail. It's just kind of about learning your strategy. So trailing's a personal decision basically, but there is definitely ways you can do it to really still maximize rewards or let these trades really play out. But I personally definitely am someone who moves pretty quickly to a 1.5 reward to secure. I mean, Miss Navy said she secures it, but Jeremy holds, and it's all about your back testing and what you come up with, because there is a benefit to both. Obviously, if you're getting some pretty insane risk to rewards like this, and you have a decent enough win rate, you can really be getting some nice profits every now and then. But there's also that risk of if you lose, and especially if you're not if you're still learning this, if you're still practicing it, if you haven't really mastered the system, like this is Miss Navy's personal little system here she's showing you. So she created this in her head and it all makes sense. But if you're still trying to learn something, I definitely suggest at least protecting your trades. Definitely move to at least break even once you get pretty far into profit, because nothing pisses you off more than when the market comes back and then stops you out and you were in profit a decent amount.
Yeah.
Plus, nothing's more important than having the capital to trade again anyway.
Yeah, so
Exactly.
as you get better and better, maybe you do start to hold and maybe you don't trail as often or something like that, but that's totally up to you guys. There's no right or wrong with the trailing, because as you can hear, there's 3 of us all giving you kind of slightly different.
Someone asked about the partials. Personally, because I go for high risk to reward at 5R, I will take a like 20 to 25% off, and that is breaking even because that takes your original risk off. And if you lose, you are losing 80% of your position. You're basically breaking even. So I do that. And that's how I go risk free.
What I do is not that. Yes. And generally I actually like to hold it. So I don't actually take any partials off, except I move my stop loss to break even. And I like when these structures form, I will move my like stop loss here, 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 etc. all the way down. I will hold the thing. But if you are looking to take partials, what I generally would be looking at is these areas. So I'll do, if I were to do partial, I'll take partial off here, partial off here, and let the rest run. That's what I do, but I prefer to hold it all the way, and I'll just move my stop loss accordingly as price trails. That's my preference anyway.
I agree with Miss Navy. That's my preference. Or I take multiple positions. Like I'll take 2 positions, but that's stacking, and that's like a whole different thing. But that's only if I already assume the move is going to go. And that's like something again that I don't recommend in the beginning. I would only recommend once you're comfortable with your strategy.
Yeah,
But-
don't stack without testing it, guys. Please.
No, but yeah, I'm not a partials person either. I don't know. It's just something I never really got into doing the partials. If I'm taking the risk, I like the risk potentially of the full move, but I do secure my risk quickly, meaning break even like Miss Navy is showing, and then just using the zones like of the areas that you're identifying after it comes back, retest 1, and then again, rejects back off, and then you would move it to that next level now that's already come back retested. As it basically starts making market structure. Once you get your market structure forming and it's forming nicely, as in this example, you can see it did, like you would just kind of trail along those levels as she showed.
Okay.
Partials are okay too. Like people can take partials too. Don't ever feel bad about taking like half of like 50% of your trade or something off the table. It's just not my personal style of doing it, but Jerry said he does it. So,
Yeah. Well, I use it as a risk-free tool. Like if you're going for like 12R and you're at 5 and you take 20% off, you're risk-free and you haven't taken that much off.
Yeah, multiple.
Someone said about they were just making a comment, but about the 1% risk thing, I will suggest for you guys that when you're first trying to use liquidity to get these ultra high risk reward trades, you're gonna see stuff in the market. I promise you, I've been through this. You're gonna see your entry model in places it doesn't belong, or that the probability is lower than you are planning for, and you're gonna take some losses on the chin. So I recommend, because you're gonna be looking for trades that are gonna get you 4, 6, 8R a lot of the time, it's really good to start with low risk, especially when you first go live. Like after you get past the demo phase and you're getting live, and you're shooting for 8R trades. This is before the prop firm thing. I don't think you guys should jump into the prop firm thing until you know you can pass it. At first, I really recommend risking half or less %, because if you think about it, let's say you're shooting for an 8R trade and you have I don't know, a 6 out of 10 strike rate. Okay. That means on average, 6 out of 10 of your trades are going to pay for 8 of your losses, and 4 of them are going to be losses. So you're making money hand and fist. So in order to go through the psychology of losing, seeing things in the market that you think you're seeing and you're not really ready to filter yet, you can live through those losses without affecting your psychology and still get those high wins. So I really recommend, you don't have to, this is just an optional thing, but I really recommend when you're taking one of these type of tight stop loss, high risk reward strategies, you start with low risk.
And another question that was someone asked as well, should I change my strategy after 1.5 years of trying it out? I will be honest with you, I've been training this and I've been working on my strategy for over 2 years now. So I've gone to a point where my strategy like this, my strategy I use now was nothing like this at the start. It was very, very different, and I've changed and adapted from my experience, and I've grown to get better at it. If you've invested so much time in your strategy, I don't recommend you just switching just because someone makes it look more appealing. Like, yeah, it does look appealing. I get it, yes. But to like strategy hop, after spending so much time, like, I'm kind of like, I would say to other like information you have that resonates with you and kind of combine it with things that you know now to kind of, improve your strategy or enhance your strategy in one way or another, not completely scrapped it, because you just spend 1.5 years. So you know what you're doing. You just want to like improve it some way. You just take like little bits here and there and just add it into it.
Yeah,
Yeah, that's
nothing.
my thought anyway. But
Nothing
yeah.
is more important than experience and confidence in your trading. And I can use my personal self as an example for this. Strategy Wars. Christy has an insane win rate, right? She does not target the huge, well, more than 1.5 a lot of times in Strategy Wars, let's be honest. But she doesn't target like the huge trades that I do sometimes. But she made more money than me by a landslide in that month, right? With a huge strike rate. That is appealing to me. I would love to win most of my trades. I don't like losing, but that's not what's paying for my life. That's not what got my payout in my prop firms. That's not like where all of my technique comes from. I read the market the way it makes sense to me, right? And that's what matters at the end of the day. We might have an edge, any of us, any other people you see on the trade floor might have an edge that really appeals to you because we are having success with it, but it's not going to be where your success comes from. So if you've been working on a strategy for 1.5 years and it's successful to you so far, just refine that, get good at that. There's no reason to ever strategy hop. Do what makes sense to you in the market. It's way better than somebody else's enticing edge, I promise you.
Yeah. Okay, so wrong place. Yeah, so the reason why I use extreme and flip zone is because there's so many zones on the charts that price can react from, but I want the most high probability locations and zones, and for me, it's flip zones and extremes. They're just the most high probable ones. On the entries though, it is definitely extremes, just simply because if you look and like if you remember my inducement lesson, you can see here, this is the flip zone because it broke below. It's been taken out. So it's just simply because there's no like liquidity for it to take out further. But you can see here, like these levels here got taken out. So I use extremes just simply because these are liquidity. So this is the flip zone trade, for example, it got taken out. Why? It's just there's nothing here for it to build up. There's no liquidity, nothing for it to take before it fills down. So it's just gone ahead and just built some more before it actually goes down. So that's why I use extremes for 1 minute.
This is actually another good example of why sticking to your own system is better, because I'll be honest, Miss Navy has a way higher risk reward average than I do, right? It just is what it is. It's a fact. But Miss Navy refines her zones down to these really small levels, whereas I like to use my whole supplier demand zone oftentimes because I'm a 15-minute trader. So we're trading the same thing. I could do what she's doing. I mean, I've shown you guys my markup stuff like that. I can analyze the charts and enter on these tiny zones. But one, I don't want to trade multiple times a day like Miss Navy does. And also, I want to get in more of entries that I do. Like if I refine my zones down to like a wick or something like that, I'm not going to get tagged in as often, even though when I get tagged in, I'll get more. So it's just a personal preference thing, right? So just because you see something, Miss Nova, she posted a 20-hour trade in the chat, right? That sounds cool, but I'm comfortable with the way I do it. You don't have to just to backpack on what we were saying before, you don't have to jump into someone else's style because it looks enticing from your point of view. That's all I'm saying. There's lots of ways to make money in the market, and all that matters is that you're consistently making that money.
Yeah.
But yeah.
So
Is there any other
class.
like before we just Sorry.
Yeah, so maybe like in a future stream, I can do exact same thing, but just use a higher time frame to entry. That way you can see that it's the same concept and how I think. It's just you can enter it differently. We'll do that a bit later.
Are you talking about yeah, we can definitely show more examples of this on higher time frames. I can promise you guys that supply and demand, though, it's on every time frame from the 1 second all the way to the monthly. You're gonna see reactions because okay, I mean, I've said it before, but really think about what it is that we're saying when we talk about supply and demand. It's an area where somebody, it doesn't matter who the somebody is, somebody out there has so much money in the market that if they put their whole order in the market, it would just move the market too far to mean anything for them, right? It wouldn't make them any money because the market there'd be too much space in the market. So if you think about it, that means they have to put a part of their order in the market, and they have big money. They're not like you and me that want to make $1,000 a night to feed our kids or whatever it is you want to do. They have billions or millions of dollars that they can sit on and be patient. So they will wait until price gets to their fine-tuned level to put the rest of their order back in the market and continue pushing the market. Because that order is so big, it's supply and demand. It stops the market from moving against them and pushes the market in their direction. Well, when you first see that happen, the sign of that is structure breaking. So if you see a higher highs and higher lows, and all of a sudden the low gets broken, that means somebody's money was so powerful that the previous protected low got broken. So there's a good chance that there's more money, but there's more orders than just that one and done order wasn't probably the end of it. There's probably more to their order in that spot, and that is what we are capitalizing on. We are going, okay, there was big money. The chart showed us with this evidence based on past historic data that there's big money that was big enough to break this zone, and because it broke this zone, there's a good chance there's more orders sitting at the supply and demand zone. Now it could be for trend or against trend, your higher probability for trend, but it doesn't matter. The point is the price is going to react to that zone even by a few pips because there's more orders in the market sitting there. It's just we want enough pips to get us to the next zone. So we got to find a bigger time frame zone and then enter it on a lower time frame so that we can kind of not guarantee, but increase the probability to the max from getting from one zone to the other. Does that make sense to you guys? That's what supply and demand trading is.
All right. Any other questions before I continue on? All right, cool. All right, so I'll go a bit. Oh, does zones can be switched to supply? Yeah, it can be, but like how I mark is a bit differently. So if you were looking at it as like a support and resistance model, then yes, this becomes support becomes resistance.
Oh.
I generally use the last candle before the down move. That's my flip zone. So last bullish candle, which is this one.
I showed a couple examples before we started of like kind of how I define a flip zone, but it's basically like when, in my opinion, it's not exactly the point that it breaks, like that demand zone doesn't all of a sudden become a supply zone, but the zone that the zone that created it basically becomes that flip zone. So well, I mean, honestly, that didn't really, we'd have to probably refine that down to time frame because it just kind of shot through it all. But usually you'll see a reaction of some kind off of that demand zone, and then it'll break down through it. And that whole range for me would be my new supply zone, if that makes sense. So it's kind of demand becoming supply, but not exactly demand becoming supply. That's more, yeah, like Ms. Navy said, that's more a support and resistance model.
Yeah, like for me, this day is over. Like there's no trade opportunity here. There's no trade opportunity here.
Yeah.
This day's over for me. Like I would wait until it comes to a new zone, so either to the extreme or to the new supply zones that's been drawn. So there's no need to force my hand to find trades. There's nothing available.
Just for you guys personally, if you want to trade the supply zones on the way down during downtrend, you don't have to wait for the extremes. You are just lowering your probability, if that makes sense. What Ms. Navy is doing is putting it at the highest probability so that she can feel safe with her tight stop losses, if that makes sense. You don't have to only use those zones. You're just going to lower your probability with each new zone. The more zones get created, the higher chance this overall swing trend or the higher time frame trend or whatever you're a part of will take back and control and push the price back against you. And that chance goes up more and more and more every new supply or demand zone that gets created in your direction. So you can use all of them. Like that thing that's forming right now at the current price on her thing, if that pushes down, that technically could be a new supply zone, and you could take trades off of it. Your probability is just going to be a lot lower than those higher ones.
Yeah.
Yeah, they get stronger as they go up, honestly, from the start of the trend to the end of the trend.
Yeah. Stronger zones, extremes. Yeah, because extremes essentially is protecting the trend from changing from one to another. So this is why this one's strong, just because we are expected to be bullish. In order for that to no longer be true, this has to break. So this means this has to be protected, and this is weak. So generally, yeah, extremes are strong just because it's protecting the trend before it changes again. So that's I would say, to me personally, extremes are strong.
Yeah, and if you guys want like a thought experiment to understand why, if you think about it, what is the market doing? It's filling supply and demand. So supply, where people are willing to sell, is going to be at a higher price than where people are willing to buy. Because of that, the higher a supply zone is, the more sellers, the higher the prices, the more people are going to be enticed to go, I don't want to buy at that price, I want to sell. And the lower the price is, more people are going to feel like I would rather buy than sell. So with that in mind, the closer you get to the top of a trend, the stronger those supply zones are. And the closer you get to the bottom of a trend, the stronger those demand zones are.
So I'm just going to move this along because, just going to keep moving this along. So I'm just going to move to the next day. So just jumping back again, no trades, no more. That's it. No more. Don't try force trades. We don't care about what's happening here. This is not important to us because it's not really breaking any zones below. These two were the ones we pointed out prior to the session. So these don't care. Don't need more. Yeah, I'll show you more green box as I go through and show you more entry models. But yeah, so at the moment, we're just waiting for the next day to come through. So I'll just keep kind of moving this along. And, oh, I didn't move too fast, sorry. Oop. Okay, well, we already saw what happens. I'm just gonna do that. Okay, cool. So essentially, now we're looking. So this was the new supply zone that has now formed. You can see here price has tapped and mitigated it. So now it's kind of consolidating. What can you see here as well is actually, this is inducement. That being said, you can see that like the same. And then this massive candle, which is, I don't know, this is London Open or whatever, has come through and taken all this out. So this is the Asian high. So this zone it has closed, but there's this zone up here as well. So we're just going to refine this a little bit here and just have a look. But then what else do we know here as well is we can see this is a demand zone, because again, you can see a break of structure upwards. And then if we're looking down here as well, there's this zone. Demand here. Yeah, so this is going to be just inducement, just because I refined it to this week, because this week here, if you look very closely on 15-minute, it swept liquidity, like right here. So it came down, it closed within this bearish candle, and then it pumped straight up. And by pumping straight up, it just kind of closed and took like these liquidity out as well. So it's kind of like a double liquidity. That was like liquidity sweep here, came down, liquidity sweep here, came up, came down, came up, take these guys out. So just a little game of liquidity here. We don't care about that anymore because it's not very important, but just to understand this is the new zone. Please bear in mind, this is internal break. This is our major swing structure. So this is now the week low. We still haven't broken like any kind of structure. We're still within this massive trend. We're just waiting for another bullish pump up to take out the week, like the high out. But these are internal structure breaks. They are not actual swing structure break. They're internal structure. So difference there. Okay, so let's just keep going and see. Now, I wouldn't look at trades here just simply because it's taken out here and it's gone here. We are bullish. So this is just a zone for me to expect for like a pullback to like say either here and go up or here and go up. So one of the twos here. This could be this liquidity sweep. So it could be sweeping this liquidity, come down here lower and take this out too. But yeah, so I don't know trades here for me because we want to go pro trend, so with the trend. So this is buying, going up is with the trend. So we'll have a quick look and see what price does. So we don't care about that. Pulls back, pulls back, pulls back, and keeps going, keeps going. Okay, so it's tapped in here very quickly. Let's jump back over here for a moment and let's have a look. Oh, didn't mean to do that. Okay, so green box. Ooh, that's not it. Go away. Go away. Okay, yeah. And green box. Okay, so again, very closely, if you look, this is the last up candle. So last bullish candle before it broke down. So we want to take the last 3 candles because we're looking for a buy. So we're taking the last 3 candles before the up move. So before it goes up. So I did bar pace too fast, but this is going to be the refined zone. So that's that one. So this would have been this entry here. Again, I did bar play it way too fast, but that's all right. I'll just do hypothetical. And then if we turn back Happy Trail and what's happened here. So this would actually be a valid buy signal for Happy Trail print, just simply because even though there was no opposite candle print, nothing like that, it actually mitigated this box. So because this candle closed back in, mitigated the box, you are valid for another buy, like a valid for a buy signal for the Happy Trail whenever it prints. This is like a really big candle, so I wouldn't enter on this candle personally, but we'll just do it for, you know, why not? But yeah, that's like a huge stop loss. I'm not gonna expect price to go crazy here, but yeah, I'll take that off. But yeah, so we'll do it like that. We'll just, this is also hypothetical, so we didn't enter this because we did miss it. So we're gonna be like, this is what it would look like. So you can look at it very closely. Liquidity sweep, clearly taken out all down here. Okay, so it looks good. Chain structure looks good. So we'll just have a look and see what happens. It goes up and then goes down. Okay, that's fine. So we lost. That's perfectly fine. We're just gonna keep going because I actually want price to come down here for me. So I'm not going to keep looking for trades in a certain zone. I generally look for like 2 trades and then I call it quits. But for me, I actually do personally want price to come down a bit further to look for a buy move up, just simply because it's just all these liquidity grabs and there's liquidity on here that I expect price taken out. I have a feeling it's news or something like that came out. So I kind of expect this to be taken out. But we'll have a look and see. If I miss a trade, it's fine. So I'm just gonna pump it across. Okay. Okay, it's gone down. All right. Okay. Let's look. So yeah, you can see here, it actually, like if I refined it, never tapped in, look for Happy Trail, sad up. This will be entry, this will be a low, you lost that trade too. So I didn't want to wait for it because I mean, like this was a really big candle. I really want to see the Asian low to be taken out. So this was more of an area I was more interested in. So we'll keep an eye here and see what price does. So we have this green box again, last bullish candle, push down, looking for a buy. So this is going to be our valid green box once it wicks up. So we'll just wait. And so it's gonna speed this along. Speed it along. Okay, cool. So it's validated the box right here. So 2 areas I'll be looking for. So I'll be looking for the extreme, of course, always the extreme. And then this situation here, because there was such a struggle to validate the box, I would also be looking to place an order like here as well. somewhere around here, but we'll keep an eye and see what price does. So if it comes in or wick us in or anything like that, we'll have a look. So keep going, keep going. And nothing. So price just ran without us. That's fine. Does it come back? No. Okay, that's fine. It ran without us. It happens. We don't need to look for trade. So that's fine. So today we took one loss, and then that's it. So we didn't catch any moves here. That's fine. So we'll jump back. We'll have a look again, see what else we can look at and see what else we can do. So any new zones that has form. Yeah, we have this zone here. And then this zone was actually a flip zone here. It kind of did break through it, so that's fine. Like we didn't enter these trades. And this is the demand zone here. So you can start seeing like these little like demand is being held. So it's showing you the buyers are in the market. So buyers are just stepping in, pushing the price up with the expectation that this high will be taken out. So we're just going to keep watching. So if it doesn't retrace your refined Menzel, so you just rather not get on the trade. Yeah, I simply just like to avoid it completely because generally I like to take it from essentially the extreme, and then once it does whatever it wants to do, if it doesn't tap me in, that's it. I just close it and walk away. There's no need to force it because there's no guarantee that if I entered like midterm here, somewhere here, it would have taken me all the way up. If we were looking for an entry, like for example, if we just quickly jump down and just have a quick peek, how would you really enter this? Like if I was looking for another entry model, like really, if I really wanted to enter it, like just really quickly, we'll be looking here. So when I do a little pullback here, looks up, goes up, validates, takes out this high, then I would look for maybe like a trade here, maybe. But personally, I don't. I'll just let it fly. That's fine. I don't mind. I'll let it fly. Okay. So I'm just going to get rid of these zones and I'll start drawing them in once we get close to our trading period. But right now, we'll just wait till the next day comes through. So what is this? Let's change this there. What time is this? What time is this? 17. Okay, still got a while. Go, 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 go. Okay, okay. All right, close. Okay, so what has price done? So they've gone up here and just wicked that. So it's wicked the high, but hasn't done anything. So it hasn't closed above, so it hasn't confirmed another trend change yet. It's just wicked. There is this massive ass bearish movement going down. So automatically this to me is a supply zone, just because these levels were all taken out. So all these levels were all taken out from this massive move. Imbalance left here as well. So yes, I'll definitely be taking this, noting this down as my supply zone. Then again, this is also the extreme here as well. So price could go up, take out these, like liquidity up here, and respect this high, which is the wick that took out this. Well, it's like sellers here, and then push down again, maybe, or it could go straight through. We don't know yet, but that's essentially what we're looking at. But right now, clear as day, that suppliers are really like they're strong, like they're in the market at the moment. So we're just going to keep looking because right now we did have this zone that we drew here. I'm just going to here as well. So we had this 15-minute zone right here, which price has now tapped into. So we'll just have a look and see. And then there's no other zone that I can see. We still have this extreme. So I'll just move this along. Move it along, which is still protected. So these are 3 valid boxes right now, the zones right now. So we'll have a look and see what price does here in this particular region. It's very strong, like very strong bearish pressure coming to the market. So we'll just have to keep an eye out. Okay, closed. And yeah, so closed. So this box is automatically invalid. So no trades there. So we'll just have to keep looking for something else. So right now we're going to be looking for a lease price to come up here, maybe, and pull down, or if it does something like here and then drops, then we can look for like a supply zone here. But right now, the bears are definitely in control. They're really strong. And if you look on the 4 hour, we can see like this massive close, like these strong candles coming down. This is just showing pressure. So we'll just have a look and see. So I'm just gonna keep going through. Okay, so now we have this massive drop here. So if I was looking for a continuation trade, I'll actually, because this whole zone is huge. I would be looking more like this. And the reason why I would draw that like that is this closed. So this zone, like this demand zone, is no longer valid. This is a massive zone, so I'll be looking to refine it a bit more, but the general region of this whole trade is this. So we're just gonna put it like this because that's too big. So we'll put it like that and we'll see what price does. So comes up. And okay, so pulls up. And okay, nothing again. So that's it, like that's nothing. Price is not giving us any entry today, which is perfectly fine. There was no valid like buys here. Like there was a valid buy here if we made the actual zone bigger, but I didn't, so I left it like this, so that's fair. But yeah, there's nothing here. But yeah, the extreme, it did come to the extreme zone in general. If you were looking at this massive zone, but yeah, no trades for me today. So we'll just carry on and move along because nothing to do. The next day. And oops, I keep doing that, dang it. Okay. The other demand zone is valid as well, right? The other demand zone. Yeah, so these two demand zones are, yeah, invalid. There's nothing to do. The supply zone is invalid as well. This was the flip zone. If we're looking at it like this, which price has wicked into, that's the flip zone, which price is held up. I wouldn't take this because this is like 10 o'clock Asia time, so no trades here, but yeah, that's the concept. So just stay, this day itself, it has no trade, like that's fine, it happens. So we'll just continue on and just have a look and see what other entry models we have here. So I'll just move here. So we still have this supply of zone valid. This has already been tapped in and mitigated. This is no longer of interest. That's fine. This is also another level we can look at as well. So they're very close together. 15 minutes. I'll actually take this one out. Take that one out because it's already been mitigated. So I'm looking at this particular zone, and I do like this zone as well, just because of all of these levels. So inducement. So these are the wicks here. So a lot of wicks here, which I'm like, that's to me is of interest. If I normally do like to refine like this, but I'll make it bigger just to make sure I get into the move. But yeah, normally I would look to just do this because of these wicks and keep this zone here. Yeah, the green ones are just London sessions. This is normally what I trade. This is where I start my analysis before it opens, and then I will trade within it. I will sometimes go through to mix depending on the sessions, but generally I will stop after like mix close. That's just my preference. Okay. Supply drawn here, valid. Why? Because these levels here were taken out. So that's just a supply. And this is like a really strong bearish candle. It did have like these wicks. Sorry, the imbalance in here. So it's just a strong candle, but it has come up and mitigated it here. And if you look very closely as well, it did do a liquidity sweep here. It swept liquidity out and took out this level here. So that was taken out. So we're just kind of waiting a bit more, giving us a bit idea. But right now, this zone here is the one we're looking at. That's the zone of interest. And then everything else has been mitigated. This is still valid. This is no longer valid, but it's still, I'll put it there because it's hasn't closed above, but these two zones I'm looking for my trade. So we'll just see if price comes down into this one. It has, okay. And then it did that, great. So let's draw our green box. Okay. Mixed order says. Yeah, it's a little bit of both because sometimes I like to trade with news just simply because news helps with movements. We explain about it. Zones are drawing different ways. Could you expand about that? Do you mean like these certain zones I've drawn? Because like this zone I drew because it took out this level. So I took these levels here. So I drew the stone and it left in balance here as well. So it's just something that I've noticed. I'll put that there. This zone here I've drawn because this was like a massive drop. And then this, if you look closely, was the flip zone. But then again, flip zone extreme. So this is the extreme, this is the flip zone. It tapped into the flip zone. So that's done. So this is done. And if you look here, it's just kind of smashing you through it. So that's fine. I've taken out to clear the chart up. This zone is still valid because it's extreme. So this is the swing low of this 15-minute move up. So that's the extreme. And then the 15-minute extremes up here. But yeah, does that clear things up about why I draw the zones? Yeah. Okay, cool. Okay, I'm just going to jump back a bit now. So let's have a quick peek and see what price does. Okay, cool. So right now this is the wick up. Just going to wait for a valid. Okay, wick. So validate the box, which is great. That's perfect. So now we'll just pick our zones that will wait for price to come through. So I will be looking at this one in particular. It's just simply because there is that wick up that came down. To me, you could do it like this, but I'm just going to do it like this because that to me is an inducement level. It's just like a little very strong, obvious move down. So buyers pushed it up. So it's just kind of very obvious to me. So that's the demand zone here. So I would put my limit order here. And just target the highs here. We force on the trend, like trade with the trend, or supply and demand is much more important than a trend structure. I do a little bit of both. So I do like to do pro trend. So I do take in consideration what's happening with the trend. So bearing in mind, we're still within this massive 15-minute structure. So we haven't gone through, we're just kind of consolidating in between. So again, price can actually do whatever it wants to do anywhere in between these two particular points. So I will trade based off supply and demand zones, since I do trade on a lower time frame. I do go through essentially if supply zones are being built up, so new supply zones are forming and demand zones are failing, it means at that very moment, suppliers or bears are in the market. So they have control in that particular moment. So I'll be looking to go with them. And I also would be looking to go with the overall trend up as well. So right now, yes, this is the internal structure. So these are all internal structure breaks. They're all just internal structure. This to me is the extreme because this is also the extreme here as well. I'll be looking at this zone as well because this was the move up. So it's like a little pullback, essentially, if we're looking at it. It wicked up, came down, and this could be a potential reversal. So it could be potentially going like this. Potentially. We are at a higher zone as well. It's a 4-hour supply. So it's showing that the 4-hour supply is being respected. So this could be the start of a retracement or a pullback on the 4-hour. So we can kind of see that coming through on the 15-minute because when price wicked it but never closed above it, then it's just showing that it didn't have enough strength to push it forward. But then we had this massive ass drop down. Then we have this pull up, which is like, if you look in the trend, this is like the lower high. and then we can be looking at another drop down. That's potentially, or this could be like, you know, just doing this, like, so there's two kind of options you can be looking at. You don't know, you just have to play with price, but there's two different scenarios there. If you look at 4 hour just very quickly again, you can see here, it is not giving you much. It is at this particular zone here, but still not much to play off. So you can't really do much. You'll have to go off by 15-minute and just play, like go off new zones and go structures and stuff like that. But yeah, generally pro trends, I do like 4 hour and 15-minute go through, like go together, but sometimes you just don't get that clear picture. So you just have to kind of go with what market is giving you. Okay, so I'm just going to quickly go back to my 1 minute and just see what price does. So we pull back and okay, so no, didn't even tap me in. That's fine. This is the happy trail entry here. And then we'll just do 2%. Go, 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 go. So just a lot of consolidation happening over here on the 1 minute. So we'll just keep going until it does something. So this loss was fine. And did I even get tapped in yet? Oh, I did. Okay. So we got tapped in. So we'll just keep going. Go, 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 go. Go, 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 go. Go, 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 go. And then if you're managing trade here, yeah, so we're looking at like these zones here, like highs. We are going counter trend, or like we are essentially going against the who's in control at the very moment, which is, you know, the bears. So being like, you want to be very, very careful and cautious. You aim for like structures. So like these structures here, if you want to go for the moon, you can go here. But again, you just kind of want to go for zones where it makes more sense. So I'm just gonna, I'll leave it where I was before. I'm here for now. But like, yeah, let's see what price does. So tapped in, just keep going. Go, 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 go. And then just keep going. And it's crashed down. Okay. And then what has it done? So if you look, it's done liquidity sweep. This is a liquidity sweep here. Rid of that. So it's come down, it's taken out liquidity here. And then it's, we'll see. So I'm just gonna actually do, because I have another, like that trade's open. I'm just gonna do this. So this trade is taking out a break even, which is fine. I'll just have a look at 15 minutes. What has it done? So it's gone and taken out liquidity here. And then we're still back at the zone again. So I'm going to look for another opportunity again, because we're still within the 15-minute structure. It's still bullish. So my expectation, because nothing has changed yet, it's still within a bullish trend. It's just consolidating and doing a lot of, like, you know, stuff in the middle. But I'm just going to look for another entry, see if we can get something else here. So let's have a look. So get rid of all of this. Okay, so we have this candle here, which is the demand value of the box. We're at the double high here. And then there's liquidity sweep here as well, like a really big liquidity sweep down too. So right now I'm expecting this to be taken out. I will be looking at the, I'll say this zone too. I like it too. I'll say these two zones I'll be keeping an eye out. The reason why I have these particular two zones drawn, just because I like this double bottom. So I'm going to place an order here, and then obviously I'll have one here as well. But we'll see which one, if it does get tapped in, or does it fly off, or just straight on lose. So we'll have a look and see. I'm just going to do this one first. and then we'll just target the tops here. We'll just have a look, goes through, up, 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 comes down. Okay, we're in, okay. And this was the Happy Trail entry here. 2. Okay, they both won. Okay, so that means this one didn't get trigger in, that's fine. This was the entry here. This is definitely more like a little bit more advanced, don't mind, but like essentially, yeah, it's just that green box got validated. I was looking for areas pinpointing where price will most likely come down to, saw this wick, you zoom in, this wick itself took out these 2 lows here. There's these double like same equal wicks. So I just kind of made my zones essentially that high of this candle. And then if you look, price came through and took out this level here. So it did what I kind of like expected it to do, which is fine. Okay, so that's pretty much it. That was, yeah, like a bit late. So we'll start a new day. So we'll keep going on until a new day comes. Go through, go through, go through. Okay. So that's a new day. So what do we have here? I'm just gonna get rid of these trays now. They're just in my way. Okay, so what do we have here today? All right, so we're back on the 20th. Supply zone, so price gone up, pushed all the way up, taking out this one. So this would be the demand zone, price came through, so nothing there. This was last bullish candle, closed down, this is the extreme. So we'll just have this, so price came up to the extreme. So I'm putting my supply zone like this, just because it's up here. 10% go through, defocus into that. Okay. Yeah. So these zones, I'll tap this one here. And then I'll be looking for a demand zone down here. So again, liquidity down here. And then again, we still have this one. Oh my God. This one is still holding. So it hasn't, it's still holding. So we're still dragging this along. This zone is still valid because price is still within the zone. Still hasn't, broken through it. So it's kind of waiting, but keeping in mind, this is also valid too. So if we're kind of adjusting it a little bit, yeah, so these two they're both valid. They're just very close to each other, but they are both valid. So we're just gonna have to wait a bit. There's not much we can do here, but we'll just have price come into here and tap. These zones, no major structures. So these zones don't matter. They're very small minors. Don't matter to us, except these one, but that's gone. This is extreme, these two zones. Okay, great. So we have this zone, this zone, and this zone, this zone. That's fine. Let's just take a peek at the 4 hour and see what it does. Oh, well, that's spot everything. Never mind. Jokes. So we'll just keep going down. Ah, wait. Oops. I didn't mean to. No. God dang it. Okay, well, I kind of just spoiled that for you guys. You're welcome. Okay, well, kind of spoiled that. Sorry, guys. Whoops, daisy. But yeah, so that tapped all the way down there. I wasn't doing 1 minute, but I tapped 15 seconds by accident. So again, if we're looking at the entry models, it's just simply green box, extreme. Move it like that. Demand, inducements down here. So you can see equal lows, take out the lows of this one, the equals gone up. So that's it. Just wait for price to come back. If it does, might not want to, but we'll have a look. It could come back to one of these areas too, because again, equal low. So it's just like there's certain areas where price can come back to. Extremes are always more important to me, just because extremes is like where price comes. But these zones are just like wherever it wants to do. So it can come through, might not come through, it can do whatever it wants to do. So we'll just have a look and see if it comes back. Okay, so just that. So I'm gonna bring it all the way back down. Okay, so it just kind of goes up just fine. Yeah, that's fine. And if you're looking at the happy trail signal, there was one here. Yeah, like if you can do it here if you wanted to, it's up to you, but there's that too. So it's just kind of didn't tap us in, but happy trail, there's an entry there. So just keeps going up. Yeah. And then what has it done? Yeah, it finally took out the structure. So now we're confirmed bullish again. So it has gone out and taken out structure. So that means the lowest point that we have been in this market is here. So that's our new protected low now. So new, let's get rid of that. New protected, break of structure. Now we're just kind of waiting for price to come up and float around. So we'll have a look and see just very quickly on the left. So we have this zone here, so the extreme. Just to bring that across. Which price is now tapped in. And then, well, let's see if it does entry here. So that's the extreme, it's kind of gone up to it. We're going to look for a retracement. So let's see if we actually can get a trade downwards, because we're looking for a retracement back into the zones. So this is the extreme. Again, it is stopping, so it might actually continue going upwards. So it can go up to this 4-hour zone instead, or it can finally pull back down to this 15-minute zone here, this demand zone here. So yeah, we have two zones. So this is the FIP, took out all of this, broke up, go up. Now we're up this 15-minute, which is the extreme, which is very far to the left. So we're just kind of waiting for price here. Essentially, once it's gone up and broken extreme, kind of do expect a kind of a pullback and go up. But again, it could still go up and then decide to pull back a bit later. So there's two options here. It is more of a risky and it is counter trend trade. We might as well just have a look and see if there's any entries there, and then go from there. Because that's pulls down. Great. So we'll just have a look. That's done. So this is the supply zone. So if you're looking for areas of supply, there's two options. So we can do option one, do a very like refined version of it and like go for like the wicks, or option two, just take in the last candle and the high of the box. That's options there. And then we'll just go down to here. Tagged us in. And then it drops. Okay, cool. Tagged us in, then drops. That's fine. There we go. We've got entry there. We did get a happy trail entry here because it came back. So it broke out, came back, mitigated the box, and then there was no like buy signal, but there was a sad one. So that's the valid happy trail print too. So that's valid. So yeah, so those two trades there. Besides that, let's just see if there's anything else we can trade. So there's this thing here as well, and it's not crazy. Okay, so let's have a look and see if we can get a buy signal here as well. A buy entry. Okay, oh, that's done. And then the last one's like all the way up here. That's huge. I doubt it. Okay, so wicked below. Of that. So you just kind of keep moving it as the price form new like new legs. So this is now the new one as well. So price did validate it, and you can see that price has come back and tap into it. So this was the extreme here, just the wick, this massive wick here. The price come up, came down. If you're looking at a happy trail print, a happy trail signal, it's right here. So we'll just do that for now. And then, yeah, so it's come through, it wicked it. So there's a little small wicked out. And then we'll just keep going. Okay, well, that's it. Okay, and I expect that was news. Okay, so we'll just go to another day, and then yeah, we'll just go through. Jeremy, do you have anything you want to share? Anything, thought process?
No, I mean, I feel like you got it covered.
Okay, thanks, Jeremy. It's so handy.
Sorry,
Okay.
I was taking a trade a minute ago while you were doing your thing.
Yeah, I saw everyone taking trades in GU. How rude, guys.
Yeah, kind of short on that as well.
Rude. Okay, whatever, guys. It's fine.
Sorry.
Everyone is trading GU. Apparently, it's pumping out money or some shit. Like I'm just like, hello.
There was a really sweet setup, and
Okay,
it
well,
turned nicely.
I'm not gonna look now. Don't spoil it for me. Okay, so yeah, we'll just look at again another one. So we'll just keep going. But yeah, it's just the same concept. It's just that wait for them to come to your zone. This is a bit like essentially it's something you can see that happens with any price. It's not very clean. It just kind of consolidates, does one thing, goes down, does whatever it wants to do, and just kind of dilly-dallies until it does something. So it finally did break structure upwards, and it took like Monday all the way until like Friday, essentially 5 days for it to even go up. So you had like kind of consolidations in between the zones before it finally broke structure upwards. And you kind of have to trade between zones, and that's what I do. I just trade between zones and areas that's higher probable. So I just pick those zones. Yeah. Okay, cool. So I'll just quickly do like another day and just have a look and see what we can do there, and then we'll go from there. So very quickly, these are the new zones. So this is the new pricing. What has it done? So we can see here that this whole area is down. I'm just going to take this whole region because it's like a little small consolidation region. So this whole area is the new supply zone going downwards, took out this level here, level, and these levels there as well. We're coming down to this zone again. It has already been respected before. And then obviously there's wicks here. It's still, there's like a lot of demand zones kind of sitting here. So we're going to leave this one here because it's extreme. These are like areas within it, but there's just so many on top of them. So we're just going to leave the extreme. So price comes down here, and then we'll watch to see what price does. There's another supply zone up here as well. And of course, another supply zone here as well. So 3 supply zones, a couple of demand zones. We're just going to wait and see what price does. So we'll just wait for it comes through. Okay, opened, massive candle. So we'll just wait. Thank you. So really big. So really big move here. We're just going to watch and see what price does. Doesn't come up, but it's coming closer to the supply zone. So we're just going to have to not enter here. We're not going to do anything. We're just going to watch price here as well. So it has already, it's gone up from one zone to another. So we're just going to take that off. We're just going to look at this zone and see what it does. So this is the green box. Again, this is the green box. We'll just what price does here. It goes up. It goes up. It's going to keep going up. Okay, it comes down. This is the green box there. And it goes up again. Okay, well, there's that. So it goes up. This is the new green box, but it's broken above. So it's wicked above. So it's wicked above it. So we'll just have to look and see. So it's still wicked above, so it's still valid. So that's fine.
That's funny.
What, you took a trade, Jeremy?
Yeah, I got another short.
Of course you did. Okay. Yeah, so that's gone down. Do we have anything here? Does it validate it? It does. Okay, so it finally validates the green box. So we'll look for an entry to see if we can get something real quickly. So we'll use this whole zone here. Wicks zone here. So two options. I'm using this zone, just taking this last candle here because there's a lot of just a lot of like, it's like kind of like support. I mean resistance. Yeah, sure, resistance. And then you can do this one too. It's up to you. I'm just going to do it like this, and then we'll just wait till price comes up. Does it do anything? Okay, and then it just goes above. Okay, cool. That's fine. 15 minutes. We'll just go real quick. So close. That means this is the new demand zone. So this is the new demand zone that's formed. This is the supply zone, so it's still valid. So we'll just have a look and see what price does at the next zone it touches. Whichever zone that is, one of the zones, this zone first, okay. Have a look. So that's that one. Then we'll just wait, break that. We'll just move this around. And then, okay, well, that's gone. Okay, that's, yeah, so prices ran with our sauce, so that's fun. Okay, that's fine. So right now here, demand's in control. Demand held here, supply failed, demand held here, supply failed. So this is just going to fall. This means the zone is going to fail as well because demand is going to push it upwards. And as you can see, it's going to go with the trend. So so yeah, so we missed it. So right now, this was ideally the move we want to catch to go up, wanted to catch something here to go up, nothing came through, which is fine. Then we keep going up. So essentially that's this idea of what I do. It's, yeah, it's just like little zones you just pick that comes through. So again, like these are flip zones, last bearish candle before the move up, broke the high, came back. So there's another demand zone, comes up. Supply zone, this is like the just another level here where price has gone down, and this is the extreme. So it's right now just the bears in control. There's not much we can do. Sorry, the bulls in control. But yeah, does anyone have any questions?
Guess not.
Guess not. Oh man,
Give
missed it.
Give it a couple minutes just so they can like type it if you guys have questions, but if not, we'll probably wrap this up because you're close to 2 hours now. So I know people probably want to get on with their lives. But if you guys do have questions, please do ask now. If not, then let us know what you guys want to see for next week. If there's anything like specific you want to see, or I know she did a lot here. So if there's any part of this like back testing or the process of her strategy that maybe you guys are looking at like wanting her to break down a little bit more, she could always go more in detail in it in a live next week too for you guys.
Yeah, and the next subject I want to cover for you guys is losing, because I know it's hard to face, but losing is almost a requirement in trading. So
Yeah, Happy Trail, I always take the retracement. I never take the breakout because I always expect it to come back to retest. So yeah, it's always breaks out, retrace, and I'll take this one. I would take the move downwards. I wouldn't take the first break. I'll take this one. That's fun. Going out and taking the lows. Shame. Yeah. What? I am aggressive. I feel like I'm more aggressive than Christy. Wait, Christy, are you aggressive? How aggressive are you?
I think they mean because you wait for the retest. Whereas I
Oh.
actually don't typically care. I do. I shouldn't say I don't. I do. But in my head, I already know where the retest is going to go. So I already know that my stop loss needs to be protected above where the retest potentially would be going. But that is, I think that's what they mean. Only because
Right.
I will just take the initial breakout, but I also have to hold much larger stop losses than she's holding. So that's the trade-off, you guys. I'm more of I've been doing this a little while longer. I mean, Miss Davies has been doing this now for a couple of years, but I've been doing this for years and years. So like for me, this sounds kind of bad, but it's more like a time thing. Like if I see the breakout and I know the idea where the retest would be, then I'm okay to still enter because I'm comfortable mentally to see the drawdown to know, oh, I'm just probably in the retest, that type of situation. It is always better to wait for the retest first though when you're learning. And this is definitely a better way to also, again, give you an additional confluence or validation that the trade is going your way. And I will say that I don't want to say it every single time I use a breakout, because if I took every breakout, I would lose all the time. There's some trades where I might not be all that comfortable and I still do wait for the retest like she's showing. So I think that's all though. But my advice is always wait for the retest while you're learning. And as you get more comfortable, eventually you might be able to be like, oh, maybe I'll just take the breakout here because I know my stop should be somewhere around here if it does retest. But it's always better to wait for that retest. But yeah, you are more aggressive in that you're on the 1 minute and you're taking much tighter stop losses. So it just, I guess, is a view of how people look at what aggressive is versus what someone else thinks it is.
Yeah, fair enough.
All right. Any other questions? All right. So if you guys do have recommendations, you can find her in Happy Charlotte chat. You can ping her anywhere in the Discord or Jeremy as well. So if you guys have any ideas of what you would want to see in the future streams, but like Jeremy said, next week, it sounds like they want to focus on how to lose, how to accept your losses.
Yeah.
I mean, I think Todd said it pretty well. Like people are pretty good at losing. You're pretty well versed at that when you start trading on how to lose. But I think understanding that it's a reality and not like striving for perfection, that's always a pretty big thing to kind of understand, and accepting the fact that the losses do happen. If you have any other suggestions for a stream next week though, or anything else you want to see or clarify, do reach out to Miss Navy or to Jeremy, and we'll see you guys next week.
Yeah. Thanks,
Right on.
guys.
Thanks, Miss Navy, for taking the show today.
Yeah, thank you.
Thank you.
All right. We'll see you guys later next week. Bye.
Later.
Catch you guys. Bye.